Hello and welcome to the Gold Ghosts and Guns podcast for April 18th, 2025. My name is Tom Luongo. We've got a lot to talk about, and it is episode 214. And I have with me a returning guest who we haven't had a chance to. We were just talking about it before we hit record that we haven't spoken in over a year. And it's good to catch up with Brent Johnson of Santiago Capital. And we're going to the last $2 bulls on the planet are going to sit around and have a chat today, and it's going to be hilarious and it's going to be fun. Brent, how you been? How are things going?
I'm good. Yeah, things are good. Things have been it's been a crazy year so far, but luckily we were anticipating a crazy year, so we've actually done pretty well and have enjoyed the volatility, so to speak. So but that doesn't mean it's going to be fun going forward. There's a lot of balls in the air, and how they come down is is anybody's guess at this point.
It is, and for everybody who's who's not aware of this, Brent is famous for the dollar milkshake theory. And as and I do a version, I think I do a version of this, the same thing in terms of how I discuss it in terms of the euro dollar markets and some other things. And but I don't know, I'm not sure where you want to start this morning. To be honest with you, I've got about 1,000 things floating through my head, and I warned you about this before I hit record that I could be a little scatterbrained today. So I will try and back off and just let you talk. Caitlin Long, I had her on yesterday, and she interviewed me on my own podcast, and it was insane. So because she wanted me to clarify all the crap that I've been talking about recently. So sure. Here we are. The dollar's been weak recently. It looks like the anti-milkshake guys are out there circling the corpse of the anti-dollar milkshake vultures. Let's put it that way. Are circling the corpse of Brent Johnson. So now you tell me why you're not dead yet, and we'll make a Monty Python joke.
Well, so the first thing to understand is I think, and who it's hard to really know what other people are thinking, but I always try to put myself in other people's shoes and understand where they're coming from. And I think part of the problem is many people have equated the quote unquote dollar milkshake theory with the end of the dollar milkshake theory. In other words, there's this big blow up. The DXY goes to 150. We have a monetary reset, probably a war. And after that, the United States is a pile of ashes and ruin. And the reality is the milkshake is not a one-time event. It's a process. And when I first started talking about this in 2018, I put a timeline on it that I thought it would play out over, probably 5 years. And about halfway through that, I said, well, at the beginning, I said, if I'm wrong, it'll probably take much longer to play out than the 5 years. So I don't think I'm early, or I don't think I'm late, but I might be early. And the interesting thing is that the further we get into this, the longer I think it may take to ultimately play out. And what I mean by that is I sent out a tweet the other day, and I think this explains it pretty well. I don't know if you watched the Game of Thrones series or not.
I did.
But in the very first episode, you knew 3 things. 1, you knew winter was coming. 2, you knew that Westeros was a really messed up place. And number 3, you knew there was going to be a huge battle between these 2 families, right? You knew that like literally within the first hour.
Right.
But there was 8 seasons for it to fully play out. And I kind of feel like we're maybe in season 2 or 3 right now. Right. So yes, we know already there's a big battle between the United States and China. We know the world is really messed up right now, right? And we know that we're probably going to have a winter before we have the summer, right? I mean, we don't know, but those are not too far of a leaps to make.
Right.
But these things just don't happen right away. And I think many people who either don't like the milkshake or don't understand the milkshake or don't want it to play out, it's because they want that final episode to happen tomorrow. They don't want to go through the 8 seasons to see all the twists and the turns. And my belief is that there will be twists and turns. There will be times where China looks like they're winning the game. There will be time where it looks like the United States is winning the game. There may even be a few episodes where Europe makes a little charge and, looks for at least an episode that they might actually have a chance when we all know they're going to be the ultimate loser.
When they're ultimately Stannis Baratheon, yes.
Right. No, exactly. That's a good, there you go. It's a good analogy. They're Stannis Baratheon. They feel like they should inherit the kingdom, but yet nobody really gives them much attention. and that's really where I think that we're at.
Mhm.
But there's no question things are heating up. There's no question that Trump is a big reason why it's heating up. But I largely believe that what is happening now would have happened whether Trump was elected or not. But I think he is accelerating the game and making it much more obvious what is happening. Whereas I think the same things would have happened, but with much better cloaking and much better, PR and more diplomacy. But I largely think this whole thing would have played out anyway. So I kind of rambled on there for a little while, but that's kind of where I think we're at right now.
Yeah.
I think the people who think that because the dollar's down this year, that the whole season and the whole series is over again, just don't understand how the system is designed, and I don't think they understand how the system works.
Yeah, I agree with it. And the funny thing is that no matter how this thing plays out, as long as we don't get season 8 of Game of Thrones,
Yeah,
in terms of quality and how this thing plays out, I'll be very happy.
yeah,
So, because I mean, or season 7, season 7 wasn't very good either. But well, I think those first 3 seasons are probably the best because that's where the story was strongest for a variety of reasons. But yeah, so let's talk about that. The issue that everybody has is that they when the market moves their way, everybody does this. I do it. We all do it
sure.
a little bit because we're all selling a little bit when we're out, especially when we're in Twitter land. Um, that okay, so the market's moving our way. See, everything is proceeding as I have foreseen. Everybody puts on their Emperor Palpatine cloak and they do the thing, right?
Right.
But in the but it is, you're right, the longer game that you really have to look at. And this is part of the reason why, for example, with my people, my patrons, I update them with the state of all these markets on Wednesdays and Sundays. But then at the end of every month, I back out. I don't look at just weekly charts. I then look at the monthly chart. Then I go at the end of the quarter, look at the quarterly charts. And then there's a big market report at the end of the year, where I look at all the annual charts. And then you ask yourself the question, did any of this stuff that we discussed during the year even change the fundamental thesis? And generally the answer is no, if you've got the right thesis. And if you've got the wrong thesis, then you have to make a big thing, a big correction. And I haven't had to make a big correction since I first embraced, really going back around 2015, where I said, yeah, no, the euro is not going to replace the dollar at
Yeah.
all. It's not going to happen. And then everything else since then has just been playing out as, similar to the way you've talked about it. So maybe for those who, I mean, I don't know. I hate for you to like go over the basics of the dollar milkshake theory for the 14,000th time, but even just a small brief introduction
Yeah.
for those who don't
Yeah.
quite get it, because the truth of the matter is that no matter how much we think people have heard this stuff a billion times, sometimes even it never hurts to just go back over some of the primitives so that we can then establish where we are at this point in the game, or in the
Sure.
show's lifespan. So
Yeah.
let's just start there.
Well, so let me just give a quick explanation of what the milkshake theory is, and then I'll give a quick explanation of how I came up with it and why I came up with it, and then I'll
Sure.
just give a quick, how we got to where we're right now. So post 2008, I was what I would classify now as a financial justice warrior. I thought that I was very upset with the way things went down. I didn't think it was fair. I didn't think it was right. I didn't think it was what a free and fair society should do. I didn't think the rich should be bailed out at the expense of the poor. And I thought there's no way the government could get away with printing all this money, and the dollar was going to fall and gold was going to go to the moon. And that was the way it should be, because that's what the U.S. deserved to happen. Right?
I agree. And I was in the same mindset back then
Yep.
as well, FYI.
Yeah. And so, I probably remained that way for the next 2 or 3 years. And then there was probably a period of 2 or 3 years where I was kind of in neutral zone. I had gotten over my anger. I didn't quite have the dark cloud circling over my head that, followed me around wherever I went. And it was really the summer of 2014 where I started to question things. And if people go back and look, in the summer of 2014, the dollar went on a 6 to 8 month run or I think it went up like 15% in 6 months. I mean, some ridiculous move. And one of my friends had made this call. And my friend is a big believer in gold,
Hmm.
as I've always been a big believer in gold. And I should say now, I've said forever that I think gold will be the ultimate winner, and I still believe that gold will be the ultimate winner. But I'm also interested in the path to that destination, right?
Right.
So in 2014, the dollar went on this huge run, and my friend had called it, and I was kind of thinking, well, he's smart. He believes in gold too. So how can he possibly believe the dollar's going higher? But then it did. It was an amazing call, one of the best calls I've ever seen. And so that kind of made me start thinking about things a little bit differently. And so for the next couple of years, I tried to keep more of an open mind. I wasn't as mad about things. And at the time, gold had started this, 5 or 6 year bear market, and it was still down. And finally, I just said, I have to figure out why gold is not going higher
Hmm.
and why the dollar is remaining stronger than I expected. And when I talk to anybody in the gold community, and I have a lot of friends in the gold community,
Yep.
nobody wanted to talk about it. The answer was just wait, it'll happen. The dollar's trash and gold will go higher. And listen, that's fine. That's fine. But I at least wanted to examine it. And
Hmm.
nobody in the gold world wanted to examine it. So that's when I just kind of doubled down on my old stuff. And what I realized probably in the 2016 timeframe, 17 timeframe, was that the issue that I was having was that I was focusing all of my energy on the United States, and I was analyzing the United States in isolation. And I think I did pretty good work on the United States. And I think if you focus on the United States, the only possible conclusion that you can come to is that this is a disaster waiting to happen. The problem is if you just focus on the United States, you don't realize that the same thing exists in every other country. And in many cases, they have even worse problems, and they don't have nearly the number of advantages the United States have. So yeah, if you just focus on the US, it's going to end badly. But if you zoom out and you realize it's a relative game, and if you're allocating capital, you have to allocate it somewhere,
Hmm.
the US starts to look pretty good.
Hmm.
And that's when I start studying the monetary system more, and I understand the plumbing of the monetary system, and I understand what's going on behind the scenes. And when you just think of the real politic of it, like how the world actually works, it's governments are basically mafias, right?
Yeah. Right.
I mean that's behind the scenes. That's pretty much how it is. Now maybe they wear nicer clothes, and maybe they speak a little bit nicer, and they dress it up in altruistic belief systems, but at the end of the day, it's about power. I mean that's reality. And
Hmm.
once I came to grips with that, and once I decided to start focusing on what was actually going to happen, as opposed to what I wanted to see happen, everything became pretty clear to me, or at least much more clear than it
Sure.
had been before. Right.
Yeah.
I'm not going to sit here and say I'm clairvoyant by any means. And so it was around 2018, summer of 2018, where it's the first time I ever said the word milkshake
Hmm.
publicly. And the idea was that we had been in this 40-year bull market in bonds, but now the debts in the United States and the debts in the rest of the world had gotten to a level that I thought the bond bull market was going to end. Many places around the world not only had interest rates at zero, but many places had them negative.
Hmm.
Um, people had 30-year careers on Wall Street, made tons of money, made tons of money for themselves, their families, their friends, but had never seen a bond bear market.
Right.
And I just thought, you know what? That can't go on forever. And there's eventually debt has consequences. And when that debt has consequences, there will be a sovereign debt crisis. And the reason there would be a sovereign debt crisis is from the dot-com boom, and then the global financial crisis, and then the crisis in Europe in the early 2010s. Everything had been kicked up to the country balance sheets. It no longer sat on the corporate balance sheets. It no longer sat on the bank balance sheets. Now it was sitting on the government balance sheets. And so when I thought when the next crisis shows up, it will be a sovereign debt crisis. And in a sovereign debt crisis, sovereign bonds are not bought to the same level that they had been bought previously. They may even be rejected outright, and that capital has to flow somewhere else. And so I thought that capital would flow to the United States still, And so
Hmm.
even though they may not buy treasury bonds to the same extent they had been, they'll still buy those before they will buy Chinese bonds or Japanese bonds or European bonds or Egyptian bonds. So interest rates would rise in the United States, interest rates would rise around the world, but the interest rates rising in the world would pull the dollar higher for many reasons. You get paid more to sit in dollars. You have to have
Hmm.
dollars anyway to operate on the global stage.
Hmm.
And then I thought some of that money would also flow into gold, so gold would go higher. But to buy, and I thought a lot of it would flow into US assets, meaning mainly US equities. But to buy US equities, you first have to buy US dollars. So the thesis said in the years ahead, interest rates would rise, bond prices would fall, US assets would rise, the dollar would rise, and gold would rise.
Hmm.
So now, if you look in from, I said that in 2018. Now, if you look at a chart from now and from 2018 until now, all of those things have come true. But the point I made also was that number one, I don't know the exact progression that these will happen. I said at the time, I'm going in a linear fashion, but I'm not smart to know because I'm trying to. I want it to make sense, but it's very possible that chapter 5 comes before chapter 3. Maybe chapter 6 comes before chapter 9. But these are the events that I think will happen, and so that has largely played out. And then the last thing I said was that there would be terrible drawdowns along the way, and I'll explain why that is here in a second. And ultimately, it would end really, really badly for the United States. It just wouldn't end yet. So that was the thesis. And that has allowed me over the last 6 years to really understand what has happened, to understand why it's happened, to be prepared for the drawdowns, and to participate in the runs higher. And so whether that continues to be the case, I don't know for sure. But I should say where I got the name, the milkshake theory, was from a movie called There Will Be Blood.
Right.
In this movie, There Will Be Blood, it's about an oil baron who, has all this oil business, and a neighbor's trying to sell him his land. And the neighbor says, if you buy my land, you can have all the oil underneath it. And the oil guy says, I don't really need to buy your land because I have a straw. I stick the straw down into the ground and it sucks up your oil, even though the straw's on my side of the fence.
Hmm.
And that's kind of what I equated to the milkshake theory. I said, every time there's a crisis, every time there's some kind of an economic downturn, central banks, monetary authorities, governments around the world all go into the same mode. They bail out, they provide stimulus, they do QE, they inject new liquidity into the system.
Hmm.
But it doesn't really matter who injects the liquidity. What really matters is who captures the liquidity. Just like in the movie, it only really matters who pulls that oil out of the ground.
Right.
And that for many reasons, some of them fair, many of them not fair, but this is again reality. The US has the biggest straw. And so when that liquidity gets injected, the US will suck all that liquidity up. Part of the thing that helped me understand that was if you look at the United States stock market relative to other countries over the last 25 years, every time there has been, especially since 2008, but even going back to 2000, in 2008, that's when all of the really big stimulus, QE bailouts,
Hmm.
that's when it really kind of went on steroids. So if you go back to 2008 and you look, you'll see that the whole world mixes this milkshake. They provide stimulus, but then over the next 2 or 3 years, the United States dramatically outperformed.
Hmm.
And then in like 2012 and 13, Europe, because they were in the Euro crisis, they mixed a whole bunch of a new milkshake. And Japan was mixing it too because they were decades into deflation. And then the US sucked up that as well.
Hmm.
And that took us into 2018 or 19. And then we have a downturn in 2020 due to COVID. And then everybody mixes the milkshake again. And then the US sucks it all up. And so the point is that when the crisis initially hits, everybody around the world sells their US assets because that's where most of their assets sit, because everybody wants to be invested in the US. So it's not surprising that the US is the piggy bank for the rest of the world. So it's not surprising when a downturn comes along that they sell those US dollars assets and they repatriate their capital home. But
Mhm.
then when the bailouts come and the inevitable upturn comes back, all that capital comes flowing back into the United States again. And then we get to the next crisis. You get a short-term drawdown because everybody's raiding the piggy bank again. And then you turn around and you go higher. And I have a slide that I posted on Twitter a couple weeks ago that shows this pretty clearly.
Mhm.
And so what's pretty interesting to me is now everybody thinks this is really the end. Everybody is selling their US dollar assets. The US is finished. This time it really is different. But this exact same dynamic has played out in 2008. It played out a little bit in 2013, 2012, 2013. It played out in 2020. It played
Mhm.
out in 2022. And it's playing out again now. And
Yeah.
I don't think it's going to be different this time. A lot of people do. Maybe it will be. But that's kind of where we're at. And I know I'm rambling on, but let
No,
me
no,
make
you're
this point.
not. You're doing great.
Let me make this point before I forget.
Sure.
The dollar has had a pretty big down move this year, especially in the last 2 weeks. It's down like 5% in the last 2 weeks.
Mhm.
That has actually happened before.
Mhm.
It happened in it happened in February of 2020.
Mhm.
Anybody remember what happened in March of 2020?
Uh-huh.
Right. It happened in September of 2008. Anybody remember what happened in October of 2008?
Mhm.
So, it's again, when you get into a crisis, you have to pay off either your local debts, your local margin calls. You have to put some, capital on the side for, whatever the uncertainty of whatever comes next. And so when a foreigner or a foreign entity sells their US assets, then they have dollars. And then when they send it back home, they sell those dollars and they buy their local currency.
Right.
That pushes the price of US assets down. It pushes the price of the US dollar down, and it pushes the price of the local currency up.
Mhm.
That's usually what happens at the beginning of a drawdown. It happens all the time. But if the drawdown continues and it becomes a crisis rather than just a drawdown, then the dollar reverses because now it becomes a scramble for global liquidity rather than just local liquidity.
Mhm.
And the world's money, the money that the world chose, not that the US enforced, is the euro dollar or the dollar that sits outside the United States.
Mhm.
And so when people are making their own decisions of what to sell and where to put it, they'll sell their US assets and put it in local currency. But once those dollar margin calls start coming in, they don't have a choice whether they buy dollars or not. That's what happens.
Yep.
And so whether we're going to have another dollar squeeze, I don't know. But what I do know is that the last couple of times this exact thing has played out, that's what came next. And so
Mhm.
that's what we've got to now wait and see. Anyway, I don't
Well,
that's kind of my current setup, and that's kind of where I think we are right now.
and it's what's funny, Brent, is I'm listening to all of that and I'm going, uh-huh, uh-huh. Um, and here's your their confirmatory data point for during the height of the crisis last week, the height of of all the recent unpleasantness. We had the long end of the yield curve blowing out. We had blow up and so for 3-year swaps. We had all this stuff going on. It's stuff I
Mm.
talked with Caitlin Long about in episode 213 of this podcast. What happened at the same time? There was a stellar US 10-year auction. Then two
Exactly.
days later, there was a stellar 30-year US Treasury auction.
Yeah.
And then on Monday or Tuesday of this week that we're doing this, there was a stellar 20-year US Treasury auction.
Yeah.
Because what happens when stuff like that when you have a 40 basis point drawdown in the sell off in the US long end of the US Treasury curve? Guess what? Treasuries are on sale. Don't you buy
Exactly.
things when they're on sale? Or are you trying to tell
Exactly.
me that people don't want them? Now, if you're attempting to engender, in my mind, what I saw last week was a particular group of people trying to engender a sovereign a crisis in the United States in order to punish the demon Trump for putting tariffs
Right.
on their exports. And I think that was coming from Europe, and we have plenty of prima facie evidence to that effect, because the currencies that rose were not the Chinese yuan or the Japanese yen.
Right.
The Japanese yen has gone up a little bit since then. But it was in the height of the crisis, it was the euro, the Canadian
Yeah.
dollar, and the British pound.
Well, and
And
think about this. Sorry to cut you off. I just want to
no,
make the
no,
point
no,
before I
please
forget
do.
it. Before I forget.
Mm-hmm.
Everybody will say selling US dollars because they're going to have to print a bunch of money because nobody's going to buy their bonds. Okay. So they're buying euros, even though Europe is headed into a depression. And the ECB is going to have to print money to pay for the bonds because now they're going to have to pay for their own defense.
Hmm.
And they now have a appreciating currency in export countries.
Yes.
So again, I understand where people get their negative views of the dollar, but the things that they will overlook going on in other countries in order to express their hatred of the U.S. and the U.S. dollar, in my opinion, is just pretty hypocritical.
It is.
Now, I'm the first to say the U.S. has
Hmm.
enormous problems,
Agreed.
and those prices will eventually have to be paid.
Hmm.
I just happen to believe that everybody else has to pay the price first. Now, if I end up being wrong, I'll hold up my hand and say, you know what, I got it wrong. But so far, I haven't been proven wrong, and as a result, I don't see
It,
the need to change my point of view.
well, it's funny.
And
You have two guys. Right? I hate to do this, but it's like I think you've been right about everything, and in many ways, I've been saying all of this for a while now. And all I've dug into is the incentive structure as to why the United States, the people who run the United States financial system, the Jerome Powells and now Scott Bessent and others, and the big commercial banks on Wall Street, and that see where we're going technology wise in terms of money and what the other currency blocks around the world are attempting, the governments are trying to do around the world. It makes perfect sense to me that they would, in their way, engender the crisis on their foreign adversaries. It makes perfect
right,
sense for me to say they're going to defend themselves. If the European Union wants to go to a digital euro and default on their debt and engender a sovereign debt crisis and everything else, and do away with commercial banking as the intermediary between the user of money and the central bank, who's the issuer of money, then it makes perfect sense for me to see Jamie Dimon over at JP Morgan stand up and go, yeah, fuck you. Like, no,
right.
I mean, yeah, that's just the way that's going to work, because that's reality. As you pointed out at the beginning of the podcast, it's not about what we want. It's not the world we want. It's the world we've got. And the world we've got, and this has been a phrase of mine for 7, 8 years now, is like, look, my libertarian Austrian fifis do not matter. What matters in the world is what's
Exactly.
going on in the world. And those guys are sitting around smoking cigars. Well, maybe not Diamond's case, but smoking cigars, drinking whiskey, and saying, how are we going to deal with these people over in Europe, and can we actually get out from underneath them pricing our dollars for us? Because you made the very important point that the euro dollar market is the ultimate controller of the price of dollars in many ways. But now that we're on a different system where they can't price those dollars for us, i.e., no more LIBOR. Now we're on
Right.
SOFR. Now it's a different dynamic and it's a different freaking world. And now we
That's
get
right.
to turn around and go, oh, yeah, by the way, and you're paying 4.5% for those dollars. And you can't infinitely rehypothecate them because you got to go get them in New York. Well, we're not allowed to
Yeah.
do that. And now City of London is now trying to figure out how they're going to continue to lever up the money machine. And they're trying to force the United States at every turn to go back to the zero bound, to turn the Fed from a real honest to God central bank into just another Eurodollar issuer. No
That's
different
right.
than some billionaire with a couple $100 million sitting in a bank account in Santander over in Spain, lending money out in the shadow banking world. Like, we're in a different dynamic than we've been in every previous iteration is. And what I mean by all that is not to invalidate your point, it's to support your point, because now we're in a stronger dollar based, US based system than we were then. And
That's right.
so I
And
think the milkshake theory is only going to accelerate from here, not and that's my opinion.
well,
You
so
can take it from there.
I think no. So all good points. I'm going to make 2 points. One is the
Mm-hmm.
strategy that all countries are employing, and then the point that you just made about everybody trying to blame the United States. So first of all, the strategy that is being employed by not just the United States, but literally every other country in the world right now is a strategy that goes back as far in history as you can find. And that is when things start to go bad domestically, the easiest person to blame is the evil foreigner.
Mm-hmm.
And that is exactly what every country is doing right now. Every other country is blaming the evil United States. And the United States is blaming the evil foreigners who have cheated us for so many years.
Mm-hmm.
Now, it doesn't matter whether it's complete bullshit. It's real. That is what they are doing. Again, you have to strip away what is right, what is moral, what is ethical, and just be a mercenary about this, because the people that sit on the thrones, they are freaking mercenaries.
Yes,
They
they
do
are.
not care about the individual. They just don't. I
No,
wish they
no.
did, but they don't. And so when you're putting yourself in the shoes or in the seats of these other entities or presidents or governments around the world, you can't get in their shoes and then still think like a libertarian or an Austrian economist. When you get in their shoes, you have to think like a psychopath, because that's what they are.
And
Right?
the funny thing is that what I found about being an Austrian is that I think like a psychopath and I analyze like an Austrian. And then what do we wind up with? We
Yeah.
wind up with exactly where we are. Like it's actually quite easy to predict what's going to happen
Yeah.
next, because they're going to do these things, that they're going to alter the structure of production. They're going to do this. They're going to,
Yeah.
and actually is like, it's the cheat code. Like
They
think like
are going to cheat. Knowing that they are going to cheat is the
yes.
cheat code.
Yes.
So now then the other point that I want to make before I forget is that all of the reasons that people are now saying it's over for the United States, I believe, are the reasons that it ultimately will be over for the United States. If you discourage capital from coming here, then it eventually won't come here.
Exactly.
If you treat the rest of the world like a vassal, then they will eventually no longer want to be your vassal. Right. If you put up barriers to do business with the United States, then business will ultimately fall. So I do think that is why, and that's why I have always said that this is a story that ends badly. I just happen to think we're in season 2 or 3, and we've got 5, 6, 7 more seasons to go. So it's not that I don't want people to think that I'm Pollyannish about the United States, and I don't recognize the damage that is being done. Believe me, I fully recognize the damage that's being done. But as somebody who manages other people's capital, and we don't have the option to just put it all in gold and sit on the sidelines for 10 years and see what happens down, along the way.
Right.
Like, we have to actively manage capital because they're running businesses. They have individual needs. They have other portfolio goals. So, just sitting in Bitcoin or just sitting in gold, that's just not what I do. I manage a portfolio of assets.
Right.
And that's why all of this stuff, the milkshake theory, the different ideas, understanding monetary policy, all of this is not so that I can stand up and say that I'm right. It's all of it is so that I can make money for my clients. That's the ultimate goal. Right. And I would much rather make money and be wrong than be right and lose all our capital. I mean, because that's ultimately what my job is.
The funny part about it is that, time is everything, right? This is the point that Martin Armstrong, I take credit. I give Marty tremendous credit for teaching me this over the years and getting me out of that financial justice warrior mindset.
He was helpful to me too. Like, reading his stuff was helpful. Just so you know, he was helpful to me too.
Yeah, I wouldn't doubt it. Like, but if you had figured all this out on your own, Brent, I've been like, ooh, touch you, sister. That's phenomenal, because I couldn't figure this stuff out on my own. If I'm not going to cop to being that friggin' wise, insouciant, and smart or anything. Like, no, you stand on the shoulders of the giants who got you where you are today. It's and you always give credit where credit is due. I firmly believe that. So, but this idea that ultimately, it doesn't necessarily have to end badly if we. The way I look at this, and what I say to people is, okay, this is the state of the world as it is now. Here is a potential path for the United States to fix some of its ills, while it's also, and in many ways, also trying to figure out how to, deal with the remora that are, scraping, that are hanging on to the underbelly of it, or however you want to put it, the Lilliputians that are trying to bind it down. And I think that, just looking at any one of Donald Trump's policies, like tariffs, and then focusing on that. And as far as that is it's only one phase of the plan. I think that only focusing on that is wrong, because she's also at the same time trying to do other things to improve the way, to your point, to prove the way we handle capital within the U.S. in order to turn the ship around. So yes, we're going to make the dollar more expensive to use, or at the very least, we're going to make it more expensive for you to import into the United States and dump your stuff into the U.S., because we're going to be sending a lot fewer treasuries out over the course of the next 10 years, because we're going to try and balance a budget. Right. And then, so that whole shift in dynamic, everybody's behavior has to change, and the rules of the game that we've all lived under our entire lives have to change. And much the same way as listening to you say, hey, we got an entire generation of guys who are trading bonds and, make money in bonds, and they've never experienced a bond bear market. I used to make that same point I used to make that point all the time. Like, there are guys 60 years old in this country who've never, traded a bond bear market. Like, they're retiring right. when they started under Reagan. Right. Yeah. And they're retiring in, 2016, 2018.
And they're considered bond geniuses, right?
Right.
And look at this guy. He never had a down year.
Yeah, exactly. Well, it's easy to be a genius when it's a one-way trade, right? And everybody's a genius in a bull market.
Yeah.
So actually, maybe we should shift the conversation now to what do you think? What do you see as to, or I don't care if you talk about in terms of probabilities of it happening or whatever. I mean, I look at the totality of what Trump is trying to accomplish, what Scott Bessent, I think what I've gleaned from what I think Scott Bessent is trying to do in order to try and save the ship, and not just save the ship for the United States, but also by then extension, actually the entire world, because there has to be a way to deleverage the world without turning into Mad Max.
Yeah.
Which is the standard, end game analysis for a lot of this.
Yeah. So let me give you the big picture, and then I'll break it down into like current reality. So I've even since 5 or 6 years when I started talking about my whole framework, I said there was 4 things that could happen. Number 1, the whole world could go down together in some kind of a just disaster, right? Mm-hmm. Number 2, the whole world could go up together and everything's fine. Maybe that's a low probability event, but it's possible. The other thing was that the U.S. could hang on and do okay, and the rest of the world would go down, or the rest of the world could go down, or the U.S. could go down and the rest of the world could rise. Now, I have to admit that anything is possible. There's always some probability, but I think that last one, where the U.S. goes down and the rest of the world thrives, I think is an extremely low likelihood event, and the probability is not 0, but very close to it, just because of the way the system is designed. And even if we could ultimately get to that, I think the transition would just be a disaster. And so now let's bring it down. And I don't think the whole world is going to rise together right now. There's just too many problems in the world. So that either leaves the whole world going down together, or the world, or the U.S. doing okay and the rest of the world falling. So let's focus on those 2 things and bring it into to where we're at right now. I think Trump's first term let the cat out of the bag that the current status quo was no longer going to be acceptable. I think he was a very smart, and I know people think that there's no way that you could ever equate Trump and smart in the same sentence, but I think he was very smart about the way he criticized the rest of the world. And what he said was, I don't blame China. I don't blame Europe. I don't blame if they did a great job. It's our leaders who really screwed up and made all these bad deals, right? And by him framing it that way, I think it gave the rest of the people in the U.S. On his side cover to continue making that point, and it forced the other side, meaning the Democrats and Biden that came after him, to use that same thing. And if you look at Biden's policies, re China, he basically continued everything that Trump started to put in place.
Right.
He didn't do it as forcefully as Trump is doing now, but it's not like he reversed force. And so the point is we are going to have this come to Jesus, this global reckoning, this rebalancing. Now, how we get there and how quickly we get there, I don't know, but it's not going to be smooth. Mm-hmm. And so because of what's going on domestically in the United States, I don't think that we could continue on with the business model of the United States. I don't think the domestic politics of the United States allowed to continue the global business plan for the United States to continue. I think they had to change course. I
Yep.
think politics forced them to change course. And so when you go and make no mistake, what Trump is trying to do is absolutely a revolutionary move.
Mm-hmm.
It is completely changing the business model of how the US has operated for the last 40 or 50 years. There is not a business in the world that can completely change their business model that has been in place for 50 years and not have some unintended consequences, some unfortunate events, some downsides while you, even under the best circumstances, you're going to have some bad things happen while you're making that transition.
Yep.
And I think we can all agree we're not in the best case scenario right now.
Mm-hmm.
Okay, so now that we understand that this transition is going to take place whether we like it or not, and I don't think Trump can back down. If Trump backs down, I think it's political suicide for him. So I think he has to keep. I think he has to keep the pressure on. I don't know how you would go about transitioning from the type of economy we have now and a government spending the way we are spending now to a leaner government, which spends less, and with a private economy that makes more stuff rather than just importing everything, other than the way he is doing it. So maybe there's another way they could go about it, but I can't figure out how else you could even try to accomplish those things. Mm-hmm. And so that is why I think it's going to continue whether we like it or not.
Right.
And while I don't think it's going to be easy, and I don't think it is going to be smooth by any means, I'm not as apoplectic about it as many other people seem to be. And I actually think there's a chance, or I think the probability of it ultimately working is higher than many people that I interact with think it's possible. I do think companies around the world will choose to invest in the United States and build plants here. Mm-hmm. I do think the rest of the world, in most cases, will either drop their tariffs on us or continue to do business with us, even if we put tariffs on them. And the reason is because we are the biggest consumer market in the world. Mm-hmm. And if you don't think the consumer is important, I don't know what you're doing in business, because if you don't have clients, you don't have a business. Right?
Yes.
And so,
exactly.
You might not like it. I mean, we all have a few clients that we just don't like.
Sure.
We all have them. Right. Every business that has ever existed has a client that is not the most pleasant to work with. But true. You just deal with it because it's a good client, right? Mm-hmm. That's and not everybody's always going to agree with you. But, if they're big enough and they provide you enough revenue, you make allowances for them. And that's kind of the U.S. For most exporting countries. The U.S. is either their number one or number two biggest client. Mm-hmm. If they stopped selling to the United States, they would have to find someplace else to sell it to. Now, could they sell it someplace else? Maybe. But they wouldn't be selling it at the same price that they can sell it in the United States. Right. And all the money that they borrowed to finance the production of those goods that they wanted to sell in the United States would get crushed when they have to now sell that inventory at dramatically reduced prices. Right. So this is, and I think the rest of the world knows this, and they don't like what's happening, but they're kind of stuck, right? Mm-hmm. They've got this big client who isn't treating them well, but God, they really need that revenue. And so, and I think that's what's happening right now.
I agree, and thank you for that, because that's a nice, sober, succinct way of putting it. And I would be a little bit more histrionic about it because, well, I'm Italian. But I'll say in service of that, now you understand why Xi Jinping over in China was trying to transition the Chinese market, the Chinese economy, to a consumer market in order to get that pricing leverage ultimately, and he's struggling to do so. But that's fine. They can pursue that policy as much as they want. This is ultimately, by the way, why I think the United States and China will eventually come to some kind of negotiated settlement on this. But you're correct that at this point in time, you couldn't. what if Trump was trying to do this 4 years from now? Say this is 2028, and we had another 4 years of hollowing out and destruction of the borders and the political system and the rule of law and contract law and everything that the Democrats, those Democratic vandals and traitors did under Obama and Biden. If they had 4 more years of that, you and I would not be having this conversation. We would be having the conversation of when is all the capital going to finally leave the United States and go to China? But that's not what's happening, or the European Union potentially.
Yep.
It's 2025. And it's happening now, and timing matters. And exactly what Trump is attempting to do, and the way all the carrots and sticks that he's putting in place, I think make it a very compelling argument that if given the political capital to get this done and the forbearance to get it done, then he will get a lot of it done. And even if he only gets half of it done, that's fine. The United States doesn't have to be the world's most dominant hegemon to come out of this and survive. China can take some of this load off of it because, at a certain point, rebalancing the world means rebalancing the world. And in order for the United States to survive, it's going to have to take a haircut in terms of global market share. But that's okay, because at that point, if we break the old colonial European mindset, and we break that model, and we break those forces that are still they're still deeply embedded in the entire market. We're talking about the Forex trade out of the City of London, and we're talking about all of that stuff. If that breaks and you break the European Union, that allows for a realignment of the world where everybody is empowered in a way that we haven't seen, because now we get to something close to, I think, in a long-term sense, that kind of Austrian libertarian utopia, which is, oh, look, we don't need the central banks at the same way that we needed them previously. That the era of central banks as dominant players over the price of money goes away, and they just become, effectively what Martin Armstrong's been arguing for a long time, and I finally came around on this, that the original conception of the Fed wasn't a bad idea. To be just a lender of last resort and a regional setter of it's the lender of last resort in the commercial paper market. That's the most important thing that the Fed could do, which is to stave off liquidity crises domestically, right? Yep. If that's what we wind up with, if we wind up with a Fed that looks like that 10, 15 years from now, I think the whole world would rejoice. I know I would, if I'm still around, God's forbid.
Depending
on how many cars I smoke.
I think so. I think you're right on that, and I think what most I don't know if the right way to call them retail, but just individual investors or people who are interested in global finance, but they don't necessarily work for a big bank or a hedge fund or something, but it's just something that they're interested in. I don't think that they quite understand the structure of how the system works and the pressures that those in positions of power are under to keep the system going.
Right.
And that it's not so easy just to transform back from the current system we have back to a hard money system.
Right.
And the outrage that would come from the citizenry if we moved from an easy money system or a fiat system back to a hard money system. I think there's this popular idea that fiat has been forced on the individuals, and all of the individuals hate it, but that's what we have anyway. And there's some truth to that. I'm not saying that does not exist.
Right.
But the reality is that 100 years ago, 150, or when was this? I think it was the late 1800s, early 1900s. There was this famous speech. It was called the Cross of Gold speech. And it was given by William Jennings Bryan, who was a congressman from Nebraska. And he basically said, you will not crucify mankind on a cross of gold. And what was happening at the time, we were on a gold standard. And because the global economy or the domestic economy was not growing, credit was not available because we were on a hard money system.
Right.
And farmers could not get extensions on their loans or could not get new loans to keep their farms in business while the prices were down. And so you had prices staying down and you had farms going bankrupt and you had the individual farmer losing his farm to the big bank. And then the big rich guy would come in and buy the farm at pennies on the dollar. And so that was a case where not having liquidity and not having the ability to have the lender of last resort and not having the ability to get liquidity into the system when the gold standard didn't allow it, to hurt the little guy. Mm-hmm. And so, again, I'm not saying that there shouldn't be a hard money system, and I'm not saying that I'm not in favor of a hard money system. I'm just saying it's not quite as simple as I think many people think it would be. And immediately just going back to a hard money system does not necessarily cure all the evils that exist as a result of fiat currency. Now, there are a lot of evils that exist as a result of fiat currency. This is not a defense of fiat.
Right.
I'm just explaining that the alternative does not fix everything. And moving from this system to that system would also be met with popular citizenry outrage as a result. If you think about PPP loans that everybody took back in 2020, that's the opposite of a gold standard.
Yes.
Right?
Right.
That shows you how many people wanted that bailout from the government. That shows you how many of the little guys took the bailout from the government rather than going to a hard money system and not having that credit be available. And so maybe we got a little bit off topic here, but I think it's important to understand that as we move forward, because we are transitioning to something new.
Yes.
And what that new thing is going to look like, I don't know, but I don't think it's as simple as going from our current system to a gold standard and everything is automatically fixed.
No, I agree with you. It's interesting. And it's one of the things that it's been very interesting. It's one of the reasons why I initially became very interested in Bitcoin when it first hit the world. Because I think it's what I've always argued, I really stopped to think about this. Why did the gold standard fail? Why did the gold coin standard fail? It's failed because it was incapable of keeping up with the resolution of the payment system that was necessary, because the free market was actually doing such a great job of creating new and more nuanced comparisons between goods, because it's all money is, right? It's just a comparator between the value of this thing versus the value of that thing. Well, when you can produce things for less than a penny, or for less than the amount of gold that you can subdivide it and still have it be like recognizable as a gold coin stamp from a government, at some point, there's not enough resolution in the monetary system to liquefy trades, to liquefy the trades that the market wants to produce. So what happens? I mean, even Mises talked about this. It's like, what happens? Credit shows up. Then people start using credit money. The demand for money goes up, as opposed to, Martin Armstrong's not wrong when he says that the problem with a lot of, analysis is that people are the quantity theory of money, that people only focus on the supply of money and they never focus on the demand side of money. Well, yeah, Martin, what I've always said, in response to that was, well, if you look at the quantity theory of money Wikipedia page, you'll see the exact criticism of the quantity theory of money by Ludwig von Mises himself as like one of the first things quoted, right? Is that this is part of the problem. So what I'm getting at here is that the technology of money itself couldn't keep up with the demands for a new form of money. And so the technology of money itself has had to evolve. And we're now at a moment in time, I think, that we could start to transition back to a hard money standard or a bearer asset standard with much lower leverage in the system, the total system, because we now have monetary technology that allows for the movement of capital when it's needed, because when money gets to where it needs to go is as important as how much money is available. Because I had this conversation again, talking with Caitlin along yesterday. She was making a great argument when she was working with Seagate, and they were trying to figure out how to get their money out of Thailand and back to Seattle or back to Silicon Valley. and it would take them 6 days to move their money from Thailand through a series of Forex transactions to get it to Seattle. Well, that's indicative of a monetary system that doesn't have enough technology to move the money where it needs to go. And we're at a moment in time we were talking in the context of stable coins and other things. So this is where the Bitcoin guys are both are interesting and correct, where the gold guys are also interesting and correct, because now we have the ability, or we're getting close to the ability of being able to move money where and when it needs to be, when it's demanded. And that is the key to minimizing liquidity shocks, as we all talk about on a regular basis, which again goes back to your original point as to why, when the crisis emerges, what happens. Because we don't know how long it's going to take for us to get our money out of the United States and back to Germany to take care of our debts over in Germany, we need to start moving money now, because we might not be able to get it in 30 days, right? Or because we can't get it in. So it's a very subtle point. I think it again, Brent, it undergirds everything you've talked about in this podcast so far. And I just want to make sure that make sure that I'm clear here.
Well,
that
we can use this topic that you're talking about the difficulty to move and settle money, and how it's becoming better, but there's many places and institutions that are still, let's just say, stuck in the past, as a general statement.
Sure.
That is why currently the U.S. has the advantage when it comes to the monetary system, because it is not easy to move and settle for most companies, institutions, banks, non-bank entities. And the U.S. controls the gateway for most, not all, but most of global commerce. And to your point about how we're entering this new paradigm, Trump and Bessent and et al., they're willing to do things in a way that previous administrations were not willing to do. In the previous times that we have had global liquidity shocks, the Fed has been more than happy to extend swap lines, flood the system with dollar liquidity, and keep the whole thing going. I don't think that those swap lines will be extended as easily and as with few, and if they are extended without more strenuous strings attached than they have been in the past.
I agree.
And as a result, if the U.S., let's just war game this out. Things keep getting worse and worse and worse, and the U.S. keeps using all the tools to their availability, they at some point could say a couple of different things. One, we're no longer sending dollars outside the United States, either through trade or through swap lines or whatever it is. And, we will provide liquidity to our local banks. We will provide liquidity to our local industries. We will provide PPP type loans to domestic small business, but none of it is leaving the U.S. borders. Now, if you want to move here, or you want to move your business here, you want to move your whatever factory here, you will have access to this dollar liquidity. But nobody outside the U.S. gets it. And as a result, and by the way, this would probably be bad for everybody, including the U.S. But if you have somebody providing you a PPP type short-term liquidity, you can survive for longer than the guy in France, or the guy in Brazil, or the guy in Australia, or Taiwan, or China, or wherever it is, because all of that, and this is where it's crucial to understand the euro dollar market. The amount of credit that has been extended between countries outside the United States to each other, with the U.S. not even being involved, is as big, if not bigger, than the amount of debt that the United States owes. So if they default on it because they can't get the liquidity to pay it, they're defaulting on each other. They're not defaulting on the United States. And that, it has real consequences. Now, if you say, yeah, but that will blow back and hit the United States, you're absolutely right. It will blow back and it will hurt the United States as well. Nobody goes into a fight without expecting to get hit. But the point is if we have the ability to provide the domestic funding or liquidity, And the rest of the world does not have the ability to provide new funding in dollars unless they risk their own balance sheet. And if they do it by risking their own balance sheet, then their own currencies are going to collapse.
Yep.
And so that and that is why I say maybe we will get to this new system where you're talking about, where we get immediate settlement and we get a hard money component to it.
Mm-hmm.
But the U.S. will do everything in its power to protect its dominancy before we get to that new system.
Of course. Of course.
And so in that transition, if you take it to its worst possible conclusion, I don't see how the dollar does not eventually squeeze higher on supply concerns. And this is, so I'm going to make one more point and then I'll shut up.
Sure.
I tweeted something out the other day that showed a chart of the DXY. And it basically said if the chart goes higher, in other words, if the dollar index goes higher, that's de-dollarization. That's supply getting squeezed, and we're moving towards a system that the dollar is no longer used because the debt's being canceled out.
Yep.
If the DXY goes lower, the only way the DXY goes lower is if more liquidity is being provided of the dollar and more credit is being extended for the dollar. And as that supply increases, the price falls. But as the way that you increase dollar supply in the short term is that you also increase US dollar debt in the medium to long term. And that US dollar debt in the medium to long term is demand for dollars. So as the price goes down, the long-term demand increases.
That's right.
And so I think that's kind of where we're at. Can the dollar go to 90? And yeah, of course it can. But that doesn't change the system. That reinforces the system. What brings down the current system and transitions us to this new one is the dollar going higher. De-dollarization actually takes place.
Right.
So anyway.
Yeah. No, you're absolutely correct. And what's interesting is you bring all that up. And a couple of weeks ago, I was chatting with a friend of mine over in Italy, and we were talking about the end of synthetic LIBOR, and we were talking about how we've now fully transitioned over to a SOFR-based dollar system, and that there's no more zero collateral swapping of LIBOR-based dollar contracts. Now you got to post collateral in order to get access to dollars. To your point about what you just said, well, we'll provide liquidity to you. Well, if you've got to domestic concerns, we'll also provide liquidity through the Federal Reserve, who has set things up over the last 3 years with the facilities necessary for those who are on board with what we're doing. So if you're Italy and you're George Maloney and you show up at the White House and you say lovely things about Donald Trump and the U.S. Italian relationship, and you want to do a bilateral trade deal with the United States, well, do you think Stellantis or whomever is going to get a preferential treatment by the Federal Reserve and the U.S. banking system versus Credit Agricole? Yeah. Why do you think Emmanuel Macron is all of a sudden talking about, oh yeah, it's fine for Trump to negotiate the end of the Ukraine war? Because they finally began to look at, oh, we don't have any leverage over you anymore. We have to go to you to get dollars, and we can't go to the Swiss National Bank anymore. We can't go to this one and find them in other places. We have to go and grab them. Whatever old system of flooding the world with dollar liquidity, that system is drying up, and you're seeing pockets of, it's like as the tide flows out, there's tidal pools out there where there's still liquidity. Yeah. But there's not a flood on the beach, and there's a whole lot of people who were swimming freaking naked. And I don't know about you, I don't want to look at Klaus Schwab in a banana hammock. So
imagine a scenario where the Bank of Italy gets a dollar swap line, but the ECB doesn't.
That's exactly what's going to happen. I've been for the last since about the middle of March when I started talking about this with people, and we're starting to war game this out. I've been wargaming this out for about a month now. I'm like, oh yeah, Italy's going to get swap lines. Greece is going to get swap lines. Maybe even Spain or Portugal, because I can start to do though. Now I shift over to my geopolitical hat, and I think to myself, okay, now what? If Brussels is the target, what do you actually want to do? Well, you want to create rump Europe. You want to take access to the Mediterranean away from them. You want to take, just like you want to take access. That's why Putin wants to take access to the Black Sea away from Ukraine. Same thing.
Yeah. Or what happens if what happens if an individual corporate entity in Sweden gets a swap line, but the Bank of Sweden doesn't.
Does not. Exactly.
And that is increased, in my opinion. Now, is that dramatic? Of course that's dramatic. Does it cause all kinds of other problems? Absolutely it does. But that's kind of the world where we're headed into. And I think those are the types of things you have to start thinking about. Do I know that's going to happen? No, I don't know for sure that's going to happen. No. But those are the types of things I think about, because I think that's the type of world that we're moving into. I don't see an off ramp right now. I think we could potentially get to an off ramp in 6 to 9 months, but I don't see an off ramp right now. No, I think these things probably accelerate rather than probably decelerate.
Yeah, and the final point is just the throw it out there. The crisis that we saw last week, which I think we can pretty much say now was a manufactured crisis, was unable to take down the SOFR market. And it tried hard. And so that tells us that leaves us with one of two scenarios. And I'll leave this the idea with you, and you can comment on it, and then we'll close the podcast out, which is this. Yep. Is this September, what we saw last week, is that September 2019 with the SOFR/repo crisis, which then led directly to March of 2020? Or more appropriately, let's use the repo crisis of September 2007, which led eventually to the Bear Stearns vaporization in March of 2008. Are we there? Or are we in, or because the system did not need a bailout last week, that the market absorbed it, are we not staring at something 6 months from now? It's an open question. I'll leave it to you. You can say I don't know. You can do whatever you want, but I'm going to leave that. I'm going to leave you I'm going to leave you the last word on that.
So I'm going to answer this with 3 points. I'll try to make it quick, but
sure.
I think a big part of what happened last week in the Treasury market was 2 extremely large, extremely leveraged Treasury-based trades by big banks, insurance companies, and hedge funds had to get unwound. And they had to get unwound during all the other chaos. And that was both the Treasury basis trade and the Treasury SLR trade. And you can go look those up and see what those 2 things are. But those were 2 Treasury-based trades that were done with huge leverage on the anticipation that spreads would tighten because of some regulatory things were going to happen.
Right.
And then with the chaos of Trump's tariffs, instead of tightening, those spreads widened, and those banks, hedge funds, and insurance companies with these huge positions on had to unwind them. And as part of unwinding them, they had to sell treasuries as they unwinded them. I think that contributed to the treasury prices falling while the yields went higher. That's number one. Number two, I would suggest to anybody who thinks that 10-year U.S. yields going higher is singularly bad for the United States should go and understand how global corporates and other sovereigns price their treasuries and what they price them off of.
Mm-hmm.
That's number two. And then number three, it kind of gets to your point on SOFR and why I think it didn't become a crisis. And this is another way that the U.S. has systematically put the ball into their court, was that, to your point earlier, when it was a LIBOR-based rate, the rest of the world, basically a group of bankers in London, could decide what the price of money was.
Right.
One of the reasons that swap lines were extended in times of crisis was because the way that LIBOR was set was that a group of bankers would poll all the other bankers at what rate you are offered funding. That's the London Interbank offered rate.
Yep.
And if they were all getting quotes at 4%, that was the rate. But a swap line comes in, and now all of a sudden these banks can get funding at 1%. So it was a way for a swap line not just to give dollars to other entities, but to lower interest rates overseas.
Yep.
If now It is set, SOFR is set in the United States. And if those SOFR rates are only offered to US institutions, interest rates and financing can stay low in the United States. Guess what happens to the rates offered to entities outside the United States?
Who are more levered than they are
Who are
in the
more
United
ready,
States.
more levered, and can't create the base money the way the Fed can.
Exactly.
It's a problem for everybody, but there's one entity that has their finger on the button.
Right.
And you can choose to decide whether you think that's an advantage or not, but that's just reality. And so I go back to the four things I said. The whole world can rise together. The whole world can fall together. The U.S. can rise and the rest of the world can fall, or the U.S. can fall and the rest of the world can rise. And I will. I see no reason to allocate my assets overseas right now.
Me either. Thank you, Brent. It's been great.
Thank you.
It's lovely to catch up with you, and we'll definitely.
You too.
Let's make sure that we don't let this go for more than a year, because I think the next time we chat, it's going to be a very interesting world. We should try. I'll make a point of putting it on the calendar for 3 to 5 months from now. We'll do it again. Okay.
Okay. Absolutely. Happy Easter.
Take care, man. Take care. Bye bye.